Hello, everyone. Welcome to the latest video content for Intelligent Insurer, the hub for industry news, debates, discussions, and exclusive interviews with the industry senior leaders. My name is Aditi, and I'm the digital editor of the Insurance Group. Today, we have Andy Morse with us, the co-founder and chief executive officer of Sen. Hi, Andy. Lovely to meet you. How are you doing today?
Hi, really pleased to be talking to you today. Thank you for the invite. Looking forward to it.
Thank you. Thank you for joining us today, Andy. Sen is a fast-growing insurtech, which has recently attracted over £9 million Series A funding for expansion. Sen offers commercial insurance softwares to carriers, insurers, MGAs, and brokers. We'll be talking to Andy about how the business has developed over the last 5 years and perhaps how things will develop over the next 5 years. Andy, could you maybe start by reminding people what Sen does and a brief background of the company, please?
Yeah, I'll start with a quick intro about who I am. So I've worked in the insurance industry for a number of years now. I'm a techie by background. I was a programmer, drifted into the insurance industry in around 2003. And I've drifted in and out, done some roles in other industries, but I keep coming back to insurance. And I've worked at the Central Processing Bureau for London insurance market, so exchanging, which became DXC, and latterly before starting Send was CTO for the London market for DXC. So a lot of experience in the London market, like my co-founders in the company, and really wanted to do something in the industry when we decided to found Send. So the three of us, that's myself, Matt McGrillis, and Ben Huckle. We were working together in the London market. We knew each other, and I guess we were all the frustrated entrepreneur type and wanted to have a go at something. Didn't really know how it would work out, but we did what we do best, started coding and around our existing jobs, so evenings and weekends, to get Send off the ground. We started in around 2017 and really started working on what we describe as an integration framework, which became the foundations for our product. Send Connect sits at the heart of it. We built that first because we think integration is such an enabler for the market. We were in an environment where we're seeing lots of data flowing between parties, more data needing to flow between parties to streamline things. Companies with lots of systems that need to talk to each other. So integration seemed like a great place to start, and we pivoted towards what we now sell. What we now do is we provide an underwriting workbench, and what that is, it's a one-stop shop for managing, streamlining, innovating in the pre-bind underwriting space. So it's where all the magic happens in underwriting. It's where all the hard work happens in underwriting, in terms of getting data from submissions that are frequently arriving by email, clarifying that with the underwriters, are clarifying that with the broker. You've got teams that are pulling data together to try and understand what's been presented to them. We've built a platform that allows that to, I guess, be better managed. And we've seen all sorts when talking to customers and prospects and people in the market, where technology in this space largely still out there is email, it's spreadsheets, it's in people's heads. We've even seen submissions tracked on a whiteboard before, and we thought that something could be done that was a lot better in that space. So we've been building out the product, working with some great people in the market, great customers. We've not done this on our own. We've got great input and direction from our customer base. We're now at 60 people in Send, so the company's growing quite fast. And I guess with that, we're very proud of the product we've built. We're very proud of the customer list, and really proud of a great team that we've built. We've come a long way, and I guess really now we're looking at looking at it as the next phase for us.
This whole sounds fantastic. Thanks, Adi, for sharing that. Well, you've recently raised your Series A funding. Could you give us a bit more detail on that? And in terms of how did you find the investors, and how was the process like? Also, did you consider seeking investment from insurers?
Yeah, I'll tell you about it. So I think, first of all, I'll answer why we went for funding. So we'd been self-funded to date, and there's a dynamic with that where you're perhaps not moving as quickly as you could in certain areas, and there's always competitive threats. You know, there's always new entrants in the market. We've got a long list of product features that our customers are asking us to spend more time on. So we came to a conclusion that, you know, it would be the right thing to do for this next phase of Send to go to market for funding. And what we did, I'll give you a high level view. The process took about 6 months, probably with a few more days on that, but roughly 6 months. And we found it quite a challenging process, actually. Being self-funded today, we didn't perhaps have the optics on our business that investors are looking for. So, you know, there are companies out there that will go through, you know, seed, maybe one or more rounds of seed funding, go to Series A, and have that, you know, experience of doing that from the start. So we were learning a bit as we went, and we partnered with a company called Mountside Ventures, and they were brilliant for us. They helped us understand our business in the way that investors would look at it, and helped us understand how to frame our business in that way, and helped us build, you know, our forward plans around our vision for the company. So what they did was open lots of doors. So they you know, helped us build the materials that we took to market to go for the investment, and introduced us to lots of their contacts in the market who, you know, look for investments like Send. So, you know, the different investors will be looking for different industries, and they'll be looking for, you know, companies at different stages of their growth. And we got Mountside Ventures to introduce us to a lot of people. My colleague, co-founder Ben, was really busy doing pitches to investors for I guess probably a couple of months, where it must feel a bit like Dragon's Den, you know, where you're going in trying to explain what you're doing, the insurance industry. Some of these investors weren't as familiar with the insurance industry as others, so some explaining on not just what we're doing, but where it sits in the industry. So there was, yeah, a lot of work to be done, and we settled on working with Briga and Mercia because we felt like they had the best understanding of our business. They saw the opportunity that we see in terms of growing the business, and we felt that alignment. So it really made sense. The process wasn't, as I said, wasn't very easy. I think I was reading a week or so ago that venture capital funding is down in Q3 this year, is 50% of what it was in Q3 last year. Mm-hmm. So we were doing a fundraise in a pretty challenging time, and a lot of advice was being given to VC-backed companies to look at how much money they've got, their runway for funding, and it, you know, what was considered normal for VC funding changed through the process. So I guess we were lucky that we've got a business that we generate revenue, we've got a great customer base, we've got lots of interest, lots of prospects. So that certainly helped through the process for sure.
Well, that's remarkable. So what sort of challenges do you find in terms of approaching the insurers, and what sort of companies are looking more open to change, and in which markets?
It's an interesting question, actually. I think we don't see, it's not one size fits all. So we don't say, companies in these markets or this type of business. It's down to the aspirations of the company, and we're targeting a market where there's been, I guess you could describe it as underinvestment historically. So pre-buying technology is ripe for innovation. So the companies that are keen to evolve in that space, now that could range from a startup who wants to build out a brand new book of business and wants to know where they are on their journey at every point. So they need some system, running all of that for them. It might be companies that want to leverage new data sets. So there's an increasing amount of data being used in underwriting, and our platform supports that. So we see that as a big win. We partner with a lot of sort of data providers who we use to bring data in at the right time during the process. And I guess with that coming not just being efficient in terms of turning around submissions and using technology to manage that, but companies who want to better understand what they're underwriting, how it sits within their portfolio, how fast business is flowing through. So I haven't directly answered the question, but it's really not one size fits all, but it's about what the company's aspirations are. Predominantly, we tend to work with companies who've the penny has dropped. They've decided that they need to invest in that pre-buying space. They might be looking for an underwriting workbench. They might call it something else, but that's really where we're finding our home out there in the market.
So from being largely self-funded, as you said, to now raising about £9 million, how do you plan to use this investment? What sort of goals have you set for yourself for the next 12 months? And what do your investors expect?
Okay, yeah, that's interesting. So I think firstly on how do we use the funding? So we're going to use funds in several ways. So something that we see as a big opportunity is expansion of the business in North America, specifically the US. We see a lot of opportunity there. We've got an existing customer base to build on. So we're really looking to build out, everything that's needed to support that. So we'll actually be hiring our first team members in the US in the coming months. And next year we'll be looking to establish presence there. So we'll be getting an office at some point next year. I guess the second thing for how we use the funds really is building out more capabilities in the product. So not a day goes by when we don't get some great insight into new opportunities, whether it's from our team, whether it's from customers. Our product roadmap has a lot of things on there. So we built a platform, but we feel like we've got so much more we can do. So we're really excited about what we can do with the funding on that front. We've got a lot of partnerships to work on as well. So we work with a number of delivery partners and want to make sure that they're ready to go. And so we're going to jointly build out partnership programs with delivery partners so that as we grow, we're not the customer's not just wholly dependent on Send as a company, that we've got other people in the mix that can help us scale the overall delivery of Send technology out into the market. And I guess finally, just general scaling of the business. So things that as you go through the next phase. So if we're 60 employees, we'll go over 100 employees next year. And with that comes new challenges, right? So we need new ways of working, new processes, new roles pop up that you wouldn't need in the size of the company it is now. So that's kind of the first thing, which was how we're going to use the funds. I think it's fair to say, our investors are investing because they want a return on it. That's fairly obvious. We've got ambitious targets for growth, and What we're doing though is making sure it's sustainable. So these are the discussions we're having with our investors as well. So, grow, don't overstretch yourselves, don't overhire, don't hire too quickly. And we're learning a lot of lessons from companies around us. There was a funding environment maybe a year or so ago where companies that were even pre-revenue were, getting around to funding, spending the money, burning through it, looking for the next round. And that's not what we're doing here. We want a sustainable growth, and our vision remains the same. We want to be leader in pre-bind underwriting technology space with our Workbench platform.
Interesting. So, Aditi, you've described your platform as the most advanced underwriting workbench on the market. Tell us a bit about that. How does it help insurers and give them and you a competitive advantage?
So I think we've got a platform that brings a lot of different capabilities together. We describe it as aligning your people, your resources, your data, your process all in one place. And that the value that brings is, better clarity for our customers on what they're dealing with the particular submission, how it sits with the rest of the portfolio, allows them to make better choices about what they're quoting on, and, allows them to, I guess, look at the technology platform as something that does what they need to do today, but we have a real play around building a platform that's ready for change. So change is the constant, right, for our customers, and there's always something going on in the London market. Everyone's got their eyes on Blueprint 2 and what that will bring. There are other things going on in the market as well. There's always, businesses that want to launch new lines of business, change how they're using data, change how they're pricing things. Our platform lets them record the basics, do the core workflows, but lets them also innovate, launch new lines of business, do everything that they want to do on that change front. So we see it as a change enabler, and that's why I think we're getting the traction we're getting in the market, because it's a platform that will allow insurers to catch that change that's coming along and put it into a framework and deliver on it in a consistent way. So that's kind of how we see it.
Well, that sounds really promising. But are there any risks involved for insurers, or do you see any barriers to its widespread adoption?
I think the risks involved for insurers, again, I think it's not a one size fits all. Every organization has its challenges in different ways about readiness for change, or legacy processes, or existing technology that they want to integrate with. But I think for us, it's recognition of Underwriting Workbench as a technology that insurers and MGA should be adopting. So when you start an insurer, say 10 years ago, you'd start an insurer, you might not be thinking of technology in the pre-bind space. People tended to think of buying a policy administration system, buying finance, buying claims. We think it's a new category of technology. So that's part of our challenge for widespread adoption, is that we think we're working in a new space that's been historically underinvested in, and we're going to need it's a process of education that we do, that I guess our competitors do, that the market is coming around to understanding the benefits of spending money in that space. So that's really the key barrier I see for widespread adoption of the technology.
Well, what are the other new innovations in this sphere you're seeing at the moment, and in the sense that what is next for the way the industry might leverage data and technology?
I think something that's really interesting in this space is Willis Towers Watson announcing with Liberty and Markel that they're creating a digital marketplace that's integrated integrated data and technology. It's a great story. It's great news to see things like that popping out. I've obviously spent a lot of time working on central platforms in the market. They'll evolve, but I think we're just going to see more and more emergence of, brokers and carriers connecting their worlds together with technology. And, certainly there's a whole, segment of lines of business in insurance that can be sort of, integrated in that manner, and you can sort of codify it around a set of data points and do that straight through processing. So I think that's not directly an underwriting workbench thing, but we've got a big role to play in that space. And I think that's the type of innovation where we're monitoring it, seeing how we can help insurers on that journey as well. And that's the big one for me, for sure.
While talking about that, would love to hear your outlook on the current market conditions.
Yeah, I mean, market, is what it is. We're looking to continue doing what we're doing in the market. So for us, really, our view on it is that, insurers are going to be looking at ways they can, better manage costs, streamline the operations, continue to grow the business that they plan to grow, all while, hardening market emerging and, putting pressure on rate. So what we see really is the opportunity there for insurers is, pick better risks. So pick the winners. Try and find the winners in the swathe of submissions that come into your organization, and get the technology in place that allows you to make sense of that, such as underwriting workbench technology. Everyone knows that if you've got poor data in, correlates with poor underwriting performance. So leveraging technologies that help you understand the data that's in front of you on a submission is going to be really important. So I think there's plenty of opportunity within the market, whatever the conditions are for us. We see, we've always got an efficiency play, so do more with less, but also an effectiveness play that pick the right risks in the list of submissions you've got in front of you.
You earlier mentioned about the competition in the market. Considering there are a couple of other players in the similar space, what would you say sets you apart from other similar companies?
Okay, interesting question. And I think for us, really, we obviously see a number of competitors and with interesting offerings. I think we don't come across competitors that have the full breadth and maturity of what we're offering. So there are a number of point solutions and maybe line of business specific solutions out there that we see. We're trying to occupy a broader ground, so the full life cycle of business. So being able to process new business, renewals, endorsements through our platform is something that's really important. And we've built out, I guess, a really rich data model that allows as much data as is needed to support pricing or pushing information into downstream systems. So that's where we see the difference. And we'll just continue building in that vein, really. We want to set ourselves apart. I think our customers have a key part to play in that. We'll be looking to do more with our customers in terms of innovation, sort of product focus groups in the coming months as we start using the funds that we've got for building out our product set further, basically.
Fantastic. Do you have any final thoughts, ideas, predictions, or anything else that you'd like to share today?
I think something does come to mind, which is, it'd be great to see the blueprint to work land, and we're working very closely with the team there. So we're plugged into what's going on, want the benefits of that to land for our customers. So, I've been involved in, central services, various attempts to transform things. It feels like it could happen at the moment. The timing feels right, and everyone seems to be making the right noises. So I guess we'd love to see Blueprint 2 deliver in the London market, and Send will be a big supporter of that as it progresses.
Well, great. That brings us to the end of today's discussion. Well, the use of technology in the risk transfer space is a big talking point within the industry. Andy, thank you so much for everything that you've shared with us today. It was a pleasure speaking with you. We wish you the best and look forward to catching up again and see how you're getting on and developments in the fast evolving space that we just talked about. So I would also like to thank our audience for listening to this discussion. I hope you found it interesting too. Don't forget to head over to our website, intelligentinsurer.com, where you can watch similar interviews and find latest industry news and articles. Well, that's all for now. I hope to see you next time. Goodbye.
Thank you.